Hello, hello, good morning. Welcome to another ES Futures trading stream. Today is 4:18. It is 9:24 a.m. Uh, I didn't do the stream yesterday. I feel really tired. Well, I was very tired yesterday. I just went back to sleep after I dropped my kids. I came back to the market around, I think around 1 p.m., something like that. And I came right when the market did this, right here, when the market was doing this. Was having this last push to the downside. Um, I mean, it really helped. It really helped because I also, the homework, I did every day, right? We have to do this every single day. And what I did have was, let me take this. This is the monthly, daily, monthly, weekly, and daily. There was change here, right? There is now trend, all trends and all the markets are trending lower, but there was, this is the last, the second weekly low. We have another one down here, but this pullback, the pullback that the market has had, has came exactly, or kind of like right to 5%, 5% pullback from the all-time highs. It happens to be also, you know, half back, 50% pullback from the last highs, from the yearly highs. Now, this is a yearly high, the one that I have here. Now, what else do you want, right? Well, the odds here, right? Odds were that this was, the market was super stressed to the downside and very, very weak as well. When I check the adjusted, this is the previous high, right? And the other thing is also, this is the current contract. This is the current contract, and the gap. Look at what happened with this. Is a significant gap. The gap has been closed. Now we have kind of like a trend line here. If I use these ones and these ones, it's been solved on that. If I move this one to up here, it would fit just right there, exactly, very, very, very exactly. So there is no change in the market. The way how it's been trading hasn't changed. Now, I really hope you have watched Jim's webinar yesterday. There is a really, really important information there that's, I believe, is going to be very helpful. I didn't know some things. For somebody who has not been part of any big company or have contacts in big hedge funds, stuff like that, the type of information that can be found in that in this webinar is it's really hard to find anywhere else. You can find it in YouTube, and you can also find it in his website. Part of this job is doing the homework. You have here, watch this. Maybe you don't want to take his intensive, which I strongly suggest. If you can take it, if you can fund it, if you can take it, I strongly suggest you take this his intensive. What you can learn there, you won't learn anywhere else. And knowledge is, unfortunately, is not cheap. Over $1,000 can be expensive, but only one trade. I have lost way more than that in single trades. Uh, it is well worth. It is well worth. I strongly suggest you to watch that. Okay. Now, regarding today's session, I will have said down here overnight inventory is 100% long. It's 100% long, but it is inside yesterday's range. I am starting to really started to watch the outside. It's very short. Inventory is getting shorter and shorter, and in weak hands. In weak hands. Now, can the market keep going lower? Yes, it can. Can it gain speed to the downside? Can it gain momentum to the downside? Yes, it can. The nuance here. The market is open. The nuance here, or what's this word? Oh, come on! There is something here that you will learn. It's kind of like very complex now. It has more to it than just something that I can talk in a few minutes. Please watch Jim's webinar. Right? There is something really important information there that you will not find anywhere else, or at least I did not find. Okay, I'm not trying to promote his intensive. I have taken his intensives. I really appreciate what the way how I really like the way how he teaches, the way how he I think he's the best coach, teacher, and mentor that one can ask for. It's really good. I have a highly I hold Jim really high. Now, again, we have an inside opening, inside day. The closer the market opens to previous day range, the higher the auto chop, the higher the auto rotation as well. Now let's check where this low is coming, for example, right? Now something very interesting. I have this 5% pullback from my daily charts, the ones that I just showed you here. This is a 5% from this high, right? 5% here, 7% here, and 10% down here. Right? And it is just curious, how I can't believe it, man. That the overnight was bought exactly from that level, just from that reference. Yesterday also something I was considered yesterday. There was a first attempt yesterday, the short covering. This rally that we have here, I have this as a reference on the upper side. This is a weak because it's close to the 5100 and also almost matches this high. And we had I think for me right now the action remains to the downside. We have this high and then we have L here, right? And M can be seen like a rebalancing of this short inventory. Market's getting to a close and we have some rebalancing there. Now, the market now has opened above L here, right? So this action to the downside has come to an end. There is no more for me to the downside. Now, this adds, just having the fact that market has opened or is opening inside previous day range. This is, we don't have to. We know now we might have something here, some chop or back and forth that can go on. The exception to that is when the market has or shows conviction at the opening. In either direction can be conviction to the upside or to the downside, and gets out of previous day range right away. Right away from the opening, market opens here and shoots, its way outside of this range, for example, to the downside or it can be to the downside. Now, today, any chart you pick, you will see the monthly, the weekly, and the daily trending. Weekly and daily trending lower, and the monthly that has changed. We don't have one time frame higher anymore in the monthly, so we may have some back and forth there, some sideways trading. We may have that. I'm not saying we will, right? Or we may have some downside extension and acceleration based on the fact that this market is kind of like getting closer to the 5. I was checking my when I was doing my homework. There's no support all the way to the 5,000, and the market is almost there, right? We say that, we talk about that when the market was way up here, when was doing some crazy sideways trading here. Now, and the market has reached that point. Today I have decided I am tired again. I'm tired. I'm going through certain things. It's really taking my focus out of the market. And when that happens, I really become a race to myself. Now, this is the monthly, for example. There is no more trading here, right? We have right at 50% of this rally from this yearly high. The non-adjusted contract shows that there is still a gap, but the gap has been closed, right? And the next reference in the lower side is the 5,000. Right? That coincides with the 100. This can be, traders may have seen this moving average right there. Now, when I check this, the other indices, Nasdaq is very close to the. I didn't have this 17,495. 17,495. What is that? 17,495 is 100 moving average. 17,495. It's really close, actually. It's really close. That's the weakest market here. Nasdaq is the weakest, really close. The Dow has better odds. It's getting weaker here. This break is showing some sign of weakness. I think the market may come and check these highs out before having some downside continuation. There are good odds of that happening. This is the strongest one. This is the weakest one I am seeing here. Actually, the Nasdaq has already taken yesterday's low out. All right. I'll keep this on the side. I always the bond market. What's happening with the bond market? The bond markets are inside yesterday's range. Let me check. We don't have any news. Yields are going lower, which removes some of the pressure from markets. If you have any question, please just let me know. Okay. Can you see what's happening here, right? Market is about to get out of yesterday's range. It has come to this single prints. Okay. Now there is nothing below this. We have this yearly high. Notice how little volume this market has. Okay, I'm not paying too much attention to this now. Please check again. Check James' webinar. you will understand what the odds are here, right? And that's something I didn't know. Mm. Now we are having some good overnight volumes lately, about 300, 400K. It looks like this market has momentum. Momentum is coming to the downside. All right. The distance now. Why I always check the Nasdaq? This is basically an observation. I don't trade just this. Or when I trade the ES, this is not the only thing I am watching. I am watching other markets as well. The thing is, when these markets are in sync, for example, or when all markets are in sync, the movement has a tendency to have to gain some strength. Now, if I check, for example, the Nasdaq, I have the 100 here, right? I just put this from my daily charts. What do we have in the ES? The ES has this low, kind of really close, right? This is not a bad area for any kind of trading out there, mechanic, because that's what we are seeing in this market, right? The past 4 or 5 months, these traders have been used to buy dips. That's what I'm doing. This is a logical area, to buy. And what do we have here in the ES? A little push to the downside, we take the market to this low. Right? In the Nasdaq, we take to the 100. I don't look also for exactness. It doesn't have to come back exactly to this, to the tick, or exactly to the tick. Some area also. And if it comes right to the tick, the odds that level is going to hold for long are not good. There are good odds the market is going to come back and check that level out. Sometimes even during the same day, same trading day, and other times in the following days. My decision for today is because I some of the anxiety I was having before, I feel like I am feeling like anxious, and I don't like that. Right? When I become anxious, I have the tendency to do things, right? To look for trades, and it's better not to do that. That's why the conditions I put to myself. I am only going to trade if I take a break and if I take a nap at least. That needs to happen today. This can be a good low here. This can be a good low. I don't have the markets had explored below value. We have taper here. It did not get out of yesterday's range. It did not. What else? Oh, I was kind of upset today. I thought I was fine yesterday after the close, but I get distracted yesterday late in the session. I have a good day. It could have been a really good day, but because I got distracted, I have just my focus got out of the market, and I give back some really good gains, and I was kind of upset, right? But nobody asked me to do anything. I cannot be upset with nobody here. Just I brought this to myself. And that's the thing, right? That's the thing. We have to held accountable to ourselves as well. You do something wrong, acknowledge and try to get better. Try to get better. There's huge pressure here to the downside. If this market cannot take this low out, boy, there's something. There can be something here to the upside actually, because this can very well be a counteraction to overnight inventory. 15. Let me check this thing. Now, coming back and taking settle, Nasdaq would be or can be that market coming back into the previous day range, and I don't want that. If I am short, I don't want that to happen, because by doing that, it actually puts the opposite side of the range inside. You know. I still don't have direction here. Remember, all time frames are to the downside, right? All time frames are to the downside. Now, why I want to be short here, right? Everything's telling me, the market's to the downside. Why I want to buy here? Oh, because the market's going to have a short covering rally. Well, let's wait until that happens. I'm not going to be buying the market in hopes of that happening. Something I want to show you also that I have just read a couple of moments ago. About biases. Boy, I want to buy this market. Okay, this is what I want to share. These biases. And this guy, I don't know who this guy is, but it's not. This is something really good. The reference, this bias, recency bias. You have a habit, right? You have a habit. You try to implement a new habit, but habits never go away. Never go away, right? They are still there, lurking. They can come back any time. What we need to do, what you need to do, is build a new habit and reinforce the new habit every time you can. Right? Every time you have a chance, keep building that habit, making the habit stronger. But the old habit is always going to be there. The other self-serving bias. This is so good, man. We have the tendency to blame others. Right? They blame the market, right? The market did this. The market was supposed to rally, but it break. So that's why I'm negative today. When something good happens, oh, I am genius. Right? All right. That's the second one. There are plenty. We are full of biases. The other one, this is very hard for us, but the confirmation bias. I am short in this market, for example. I am short, and boy, the market has taken this level back. It's come back inside previous day, inside value, previous day value area. It has come back to settle. That information I decide to ignore. I don't see that, right? I get short here. I only see this, but when the market starts coming lower, that's the only piece of information that I'm seeing. Right? We are just blind to the negative. That's a confirmation bias. If I have an opinion, I will also look for people that confirm that opinion, that have the same opinion. I won't listen to other people, what other people has to say. This break is, for example, right now is showing some sign of weakness. It's selling. It was selling exactly from halfback. It sold exactly from halfback. you know, it came all the way up to, to half back, right? Yeah, that's the thing. Nasdaq has come back inside previous range. The other bias, this is also so good, man. The survivorship bias is right. You know, we look in YouTube, for example, in Twitter or whatever. You find these stories, right? These traders that have made millions in one trade, or in 1 week they have made $100,000, right? But we don't look, right? For everyone, or those for every guy that posts that, there's going to be 100,000 that are out of the market, and that's a real number. Okay, I'm not making up numbers, right? That got killed, right? All their accounts are gone now. There are no more. We just don't see that. That's survivorship bias. And we see just these good stories, right? The media will focus on that one. Low small numbers bias, you know. Another one, and this is also really important, loss aversion, right? For example, you got a short here, you got a chance here, market get back inside previous overnight. We thought that this could be counter-action to the overnight inventory. This is a rotational day. The odds of rotational chop were high from the opening, but still, I got my short here. You know, we're happy, right? Well, the market come back all the way up to here. I still think the market will come back down here to my original entry, not just to my original entry, but give me some gains. We hold to the hope here. I hold to that loss. But when the market is moving in my favor, when the market is having a rally, you know, I got long here and I cut my profits here, right? That's the loss aversion bias. Really nice, really nice. I think I want to talk to give you this also. I think it's helpful. It's, you know, you start to see these kind of things from other people. It's really good here. Like now, these guys here that were short in the market. Remember we talked when the market was down here. We say, okay, if these guys cannot get outside, this will be forced to cover. Now, I think these are out now. I think these are out. We are still inside previous day range, really low. Even this is going to be. It seems like this volume today is going to be as low as today. As yesterday. My bad. I don't know what I'm talking. If you are interested in market profile, if you are a discretionary trader, if you know about market profile, if you are interested in knowing people, I am building a community here, right? It is EES Futures Trading Discord. Please feel free to come here. I'm going to post an invite in the chat. That you can find in Twitch, and also I'm going to post that in YouTube. whoever is interested, I guess I'm going to put that also in the description. My bad, sorry. How do I do that? Oh, here you go. Alright, right there. I do these streams as a way to keep my focus. Also to have some, to hold myself accountable for accountability. What else can I say here? Oh, I was thinking if I had a chance to trade it down. I think the DAO has better odds. Better odds of making having some sort of rally there. The DAO. ym4.cme. What the heck? What's the symbol? YM. Huh. I need to find out exchanging Rhythmic. I don't know what's the code for that. Okay, I guess I need to Google that. Oh, MYM. MYM. A1M4 YMM. A1M. A1MM. 4. Oh, YMM4. Gosh, I can't find it. Anyone knows? Oh, what exchange is? What the exchange is? Interest rate. I guess it's, what's that? New York SC-Bot? No, it's New York Mex. Nope. Oh, C-Bot. YM. C-Bot. YM4.CBOT. No. Okay, yeah, CBOT. It's YMM4CBOT. I am watching that market. I think I can take some longs in there because that market. Hey, yeah, how are you, my friend? I think that market has better odds. Just because of this has better odds of a rally here, or at least to the 100, maybe up here to take this. You know what? But I need to check first. That actually is doing something good there. how much time? 1 minute before the close. It's opening right at the highs. I'm going to take a long. I think I'm going to take a. But nah. I guess I am looking for a trade here. I want to buy the Dow. Yeah, even though I say I wasn't going to trade today unless I have a break. But that market looks good, you know. You know, it's really possible a rally. Or at least one short, quick rally here. Look at where it is right now. Look how that market is. How different the market is. It's way at the high. You know, this is half back. This is way at the high. That's why I'm going to watch on it. You know. If there's a pullback, I want a pullback here. Maybe to this high. Maybe down here. And this, my friends, is looking for a trade. You know, what I'm doing here is looking for a trade. Now this is no good. However, the upside doesn't look bad here. It really doesn't. It's still an inside day. Now I'm having a pullback. But this can easily switch, you know. Look at what. Oh, okay. Okay, look at this high. All right. Okay, halfback will be something like kind of here, but really nice. The market comes down here somewhere, and this can be a good stop. This can be a good stop. All right, I'm still watching here. Hey, yeah, how you been, my friend? Oh no. The upside doesn't look good. I was talking just about the Dow, right? You know, this is kind of like looking for a trade, right? I was thinking, what do I do? Okay, I'm kind of like I am bored situation, right? What do I do? For example, here Nasdaq looks. It seems the 100 is really close. You know, the 100 moving average is really close here in Nasdaq. And traders see these things, right? Traders see these things. Right? They feel like it's really close. We can get to this, right? The Dow, the ES is another story, and the Dow is being sold. It has been sold twice, right from the 100. It won't be. It is not crazy to think that this market can come back to here, maybe a little bit higher, all right? One good area to take profits could be, the first part could be like around this 292 in the Dow. Just I was talking just on the very short time frame, very for short term for this market, because this is, you can see the trend, right? The trend's to the downside here as well. I'm not looking to the downside. Yesterday we had the first time since the break started, the past month maybe. This is the first time we have an attempt at short covering. That happened yesterday, and it was happening in K, right? I hope you didn't cut long here, because it was a remember we were talking. Traders are doing what works here yesterday. I mean, in this day, the same thing that happened here was happening here as well, and the same thing that they did here. We have this high, some sort of short covering here, and then the same thing happened again, and the same thing happened again yesterday, right? And we got this yesterday, but it was different. Yesterday was different. This kind of sort of short covering rallies happen more often when the market is going to the downside than when it goes to the upside. The long liquidations that happen, but these are short, quick movements. Don't last they can have huge movements, right? They can have huge movements. Um, but we never when that's going to happen. We never know. You know, if I got if I got if I was checking yesterday that this I was checking the 80 50 80 calls. Once it has this movement, that was it. That was it. That was it to the upside, you know. And because traders are selling rallies now, the same way how traders, you know, and this is what kills traders, right? For some people, it's easy to sell rallies. For some people, for most people, it's easier to buy dips because they have the habit. Yeah, you got the habit engraved in your system. And now the rallies have been sold. The ones that were buying dips are getting crushed now. Right? All the gains that you may have, that these guys may have last year, last month, you know, they're giving away all that thing because they don't do the they are unable to do the mental adjustment. Since I was kind of confused, so I get back to basic videos not working. I got a question. Why don't we use volume POC plus our actual TPO POC? It is really up to you doing that. When you do that, I don't do that because that's by choice. I do that by choice. However, I do check, and I have another chart. In these charts, I have these notes of volume, right? In days like today, for example, that have we lower volume, I pay attention to these notes of volume. For example, yesterday, this what is this volume here doing here? It's going to the downside. This one here is going to the downside. Now the market opened up here. It didn't take these ones. You know, there's still their volume coming to the downside. So if there is something here to the upside, remember today is an inside day. They also rotation are high. Yeah, there are some odds here that this area can be taken, and maybe, you know, yesterday they came right to the 100, was sold from the 100. Who knows, right? Another thing that I have in the upper side is this distribution here. It's little, it seems insignificant, but this is a good area for me, right? If the market has the ability to close these distributions yesterday, it shouldn't be hard to close it. If it has momentum, it shouldn't be hard to close it. But if it doesn't, that also is a sign of something. I hope you can watch. I don't know if you will watch, if you were yesterday's webinar, Jim's webinar. He has really good insights. Yes, he spoke about things that I didn't know. And this is the difference between people that has been in the market as a working for big companies, right? For big companies, or themselves had been the head of these companies, right? It's a really good. I don't know if you were here early. I say I am tired today, really tired. Yesterday I was really tired. That's why I didn't do the stream yesterday. I just went after I dropped my kids. I went straight to bed again and woke up at 1 p.m. You know, right from what I saw yesterday it was so clear yesterday. This thing, right? What was happening here, based also in what we have in the charts, right? I was watching, and this is the thing, when you have your view of the market, right? View of the market. I was watching one thing. I was watching the same market as Jim, right? But his notes were different than mine. He was watching another things, right? You have this big gap here. Now it's very obvious. Yeah? Here we have this big gap. Now it has been closed. It is not here anymore. but the market was checking this. But I was paying attention to another things, right? I was paying attention to what it was. I was paying attention to this pullback here to this 5,000 and to the adjustment to 22 highs, right? There were good odds the market was going to be was good because traders were trying to find support here since this break here. We're trying to buy. It was clearly somebody was trying, people was trying to catch a knife here, there were good odds that was going to happen yesterday. It did, right? And and those trades are the ones, those kind of movements are the ones that make up, right? You have to be able also have to learn how to shake out the losses you have, and that's why it's easy to talk about that, but really hard to implement is when the loss that you have yesterday, the loss that I have just 5 minutes ago has nothing to do. The outcome of the previous trade has nothing to do with the outcome of the next trade. In the same way, if I have a win, that win has nothing to do with the next trade. It doesn't mean I'm going to win the next time. Once we have the tendency to become overconfident when we start having some couple of winning trades. I forgot about the Dow. Right? I was trying to get long. It came back down here, but I said I was going to buy. Now this high is being taken. This is why I but I didn't find location here. This was something here. I don't know what this is. And believe me, I don't know what the heck this line is. But if it is here, it's because I saw something there. It didn't get to that. And this is a trade. This is it. Can you see? This is also all time frames. The weekly is actually better here. Better. This is. If one market is which one has better odds of have some sort of rally is the Dow. Actually, where are you here? How much time? 12. It's in the upper side. 12 minutes into the second period, and this is in the upper side. I might see some sort of push, right? If the trend is being, if the market is showing some strength, this is the time when this market must show some sort of range extension here. And this is a little bit wider than half back. You can see that these are trying to sell here. This market is trying to be sold. Now we have we had 1, 2, 3 highs together. This is just adding. Still we have 4 highs here, but we have direction now. We have direction in this market. And it's doing the opposite than Nasdaq and the ES. And this is what all the traders do, right? They have a lot of screens, right? A lot of screens doing. If this is, you will hear this Buy the market that is showing strength, and sell the market that is showing weakness. Right? But that okay. You know what? Let's try. Let's try. Oh no, I cannot do that. Actually, I cannot buy that. Why? Oh, I know why. I'm using the wrong account. Okay, I got a small loan there. I am moving my stop to break even. I don't want to risk anything. I am playing this thing. This is. I strongly suggest you not to do this. Okay. I got. I will. What I. This is what I have here. If this market comes back inside this range, I'm going to let it go. All right. Just this. Because we have 1, 2, 3, 4, right? Now these ones are and now the next thing here can be here. I'm going to put this aside. The ES, right? The ES, these markets have the tendency to move, to have, sometimes they move in sympathy, just because of that. Now look at the weakness this market. Look at the weakness this market is having in the upper side. Now suddenly everything changed. Can you see? We have this weakness in the ES. We have this in Nasdaq. Look at what this high is, right? And the potential. You were talking about volume, the potential that this volume can be taken. There's supply here for this kind of movement. And now remember, today we don't have too much volume here. Let's check. Now I guess I want to see this. Oh boy. Not that I trade aside. I keep an eye, time after time, because if I focus, my focus is the ES. But if I start watching the other ones, I'm going to trade this one, I'm going to trade the other one. It's very distracting. All right. Did you see this, for example? Since I'm watching this, I'm not watching this. It keeps you focused. Remove your focus. It helps. It really look at this, for example, right? But it has a directional move. So, but what can be the potential for this market? What it is? Again, I'm going to check this one, and this is because I'm not trading today. I did a small long here in Nasdaq, in Dow. Here, right? What is this? This can be the potential destination. 38,289. 38,289. That. And some maybe a little bit higher than that, because we have a rotational market. No? But look at this. This is still, this day is still not a market to the upside. We don't have direction yet. This is just one tick to the upside. Now this high is extremely weak. This is very weak. Now, um, get the feeling. Get the feeling what the market is doing. It's trying to push high. When you see this, you will see the market go higher, higher and lower, higher and lower. You will see the push. Right? What the market is trying to do. But having most people just look at this. Right? But when you put things in context, you have better. Your odds get better. This high has not been taken. This high, it has back right a couple ticks from this high, which shows what kind of traders are doing the movement, which is not different, right? Which is not different than the past 4 months. Yes, but a move in the US could be influenced by a move in other markets. When you start to watch this, when you watch the Nasdaq, when you may have a chart, I have something like this. For the time when I used to do stocks, I have several screens. I have 4 screens actually. You don't need 4 screens. Maybe 2 is good, or I think 2 is good enough. But I have a couple screens, so why not use it, right? I have these. I have these markets here, for example. I may have this way. This is the daily. I'm watching. I start to watch, and this is because I saw another trader. I saw Anthony Crudell, for example, talking about, getting longs in strong markets and getting shorts in weak markets. We say, what the heck is that, right? And then I started to see that this market is showing the better odds that have some sort of rally here because of these 2 highs, right? And when this especially when this 3, the Russell, this 3 start to get, and most these 2, right? When they get in sync, they really, for example, when I say in sync is when they are close, for example, to a weak level, what was significant reference in the lower side. If all them are doing the same, the odds that level is going to hold are really low, right? Are really low. But if that day, when that thing is expected, one market is doing one market is going to the upside, the other one is going to the downside, the other one is trading sideways, that's something, right? You don't need that, yeah, because odds are that the ES is going to be doing some sort of can be trading a range. It can be a rotational day. The more efficient market is the ES, but you will see that sometimes the ES follows Nasdaq, right? Sometimes you will see the ES is the leading market. And another times, it is clear when you start to follow that, when you start to watch, what's happening here, right? So that's the observation part of the business. When you see something, and you see something that you can use, then keep it and try to make it better, right? I don't clinch to that. If it works, work. If it doesn't, okay. I just let it go. I don't clinch to that. But I have seen that, right? And that's why I have the bond markets, right? I have these markets here that I monitor. What's happening for us? Crude is dropping here, and this is good for the economy, right? Energy, summer is coming. Energy is crude oil is dropping, so that's good. Inflation, because this is a threat, for inflation, right? The Fed, if this is not playing with the Fed playbook, right? If it keeps going higher, so this is taking some pressure off of the market, right? What's happening with the bond market? The bond markets are really low. These are kind of like critical as well. They're really close to this low, for example. If they keep going lower, this will put tremendous amount of pressure in the bond in the markets I trade. All right, I don't trade all for this, but I see it because these ones are extremes. Well, these ones are extremes. The high is way up here, and the lows, these are really close to the lows. I'm not that far from the lows. So this is something that I keep watching, right? Um, the dollar, higher dollar also, if you trade Russell, is not, that's not good for small, mid cap markets. Gold here, I thought it was a good high, but now having this systematic selling here, I think this can keep going higher. There are also, this has been really, really spectacular short covering rally. And I think this is fair price for gold. Gold also that hasn't moved that much. And stuff like that. That's why I got these charts. Right? I can access or I can see these charts. And when you see bonds, the same thing that happened here. When you see bonds, you will see also, right? When something, okay. And this is the intraday for bonds. Okay. This is not a good low for bonds, for example. So, and where this low is right here. What happens when bonds break? Lower. This rise interests are going higher. And probably this market is good. This is not a good low, for example. Good also this market is going to take this one. And this put pressure to the downside in these markets. And you'll see sometimes, this market, the markets, our market, futures markets trade off of this market. And you'll see the link there. And you will see also, but just don't get too attached to that, because suddenly you will see, boom, there's something happening and nothing happens in the other. Or what was pushing this market, what was pushing futures in one direction, based on in bonds, suddenly it just go away. Same thing happened when crude was. Remember when crude was up at the highs? Let me check the daily charts. When crude was really high, like 130 something like that, last year was way up here. Right? It was doing some damage in the market. The ES is the more efficient market, right? You won't see those games, that you see on Nasdaq, for example, on the ES that often, because you need way more capital to do that. Now, here, what can happen here, right? This is about to take this high. It hasn't taken this low, and Nasdaq also. Nasdaq has the saddle right there, has come back inside previous range. I don't have the weak levels here, just the laterally high. I wasn't paying attention to Nasdaq yesterday. I was just checking the ES yesterday. The next question. So it's better to stay informed. Yeah, it is better to be informed. I don't know. This thing that I have. Gosh, I cannot. Okay, I'm going to take a screenshot. I'm going to take a picture of this. I'm going to show you in Discord what I have, because I cannot take a screenshot. I cannot take a screenshot. I think this is really important. Wait a minute. How can I do this? Discord. I have it here. I want to post it in Discord. How the heck do I do this? Man, I'm getting old, man. This used to be so easy before. How the heck do I? Oh, today's session. Okay. It's there. It is in Discord. I have put something there. A screenshot of the kind of notification I have from Financial Juice. Now we have direction. And all markets, if you check the Dow, Nasdaq, and ES, all are doing that. And the one that was the strongest today was the Dow. Okay. Now, what can be the potential destination in the Dow? Maybe the 38,300. Okay. But markets, trade. As in markets don't go in a straight direction. Don't just get here and start going higher. Right? There is always movements. And this is the auction, right? Because there are traders that think, okay, this is a good area to sell because it was sold from yesterday, for example, right? And there is some movement here, some selling, let it go, buying, stuff like that, things like that, right? And that's what I monitor all the time, the auction, what the auction is doing, how the auction is, and people don't know. Most people don't know what an auction is, right? You don't know the principles of action theory, right? And this is actions. We are markets trading markets are in a constant two-way action, to the upside, to the downside. I got a long here, right? And now the market today may come back to this level, right? May come back here and check this one and sold or trade around the 51 again, back and forth. It may. I'm not saying it's going to do, but it may, right? And if that happens, I went long here, I was crushed when the market sold from that level, and now it's going back. Oh boy, if I just held to my position, I would be just fine. Or I was too early. I was right, but I was too early. Those two talks, those two ways of thinking are playing wrong. I wasn't right? I was wrong. I wasn't early. I was wrong. I'm not going to hold. Next time the market is do the same thing, I'm going to hold, right? And when you hold it, the market moves in the opposite direction, and it never stops. It seems like it's never going to stop, right? It keeps going lower and lower and lower. Why, you say, right? Why that happened? Because we have this bias as well. It's wishful thinking, right? The market is going to come back. We have this confirmation bias. We have this data, small data bias, right? It happens like that. One way to fight that or to neutralize is to focus in the action, the current action. What this movement was, when you understand what was happening here, you may have been long here, but when this doesn't have upside extension, because it did really fast, when it starts to move lower and kind of gain momentum here, then you understand, oh, okay, this was a reaction to this selling that was coming from this level, and that was it, right? That was it, no more than that. Then you cut your losses short, right? You cut the losses, take your losses and just let it go. The thing is, it's easy to talk about that. It's really easy to talk about that. So, but to do it, actually, I guess we both saw that like 3 or 4 days ago, right? It was really hard, man, really hard to do it. The expectation today, I'm watching this level here, the expectation was, rotation here, right? A lot of chop. Now we know that this was a contraction to this overnight inventory, The good also was just that, right? The movement, I don't trade it down, right? I bought something there, but because I don't know how that market, right? I know how the ES moves, right? I'm watching Nasdaq as well, kind of like get that market to know. I got to know that market a little bit, but the Dow don't. I don't know how this market. I have here that the Dow moves, right? Moves like ES. But I haven't paid close attention to that. Yeah. This market seems to be, again, is selling from a mechanical reference. This is too short, man. This market is too short. Way too short. And all the markets have excuses, right? Have a reason to move higher. Now the Dow is really close to that 100 moving average, and if you get close, the closer it gets, the higher the odds that moving average is going to be taken, because this will be the third time it gets close to that moving average. I was taking out now in this trade here. I move my stop to somewhere in here, because it's getting closer to this, and I have been just taking out. I was trading only one short, one long, my bad, one contract there. And be aware of this is really small. I am just trying that market. What I am not doing the ES, right? Because it's an inside day here. Traders are selling this thing. There was a contraction to overnight inventory. the last time we had this low volume in the market, we had this where was this break? We have break like this in really low volume as well. What day was this? 15. This is 1, 2, 3 days ago. 1, 2, 3, no, 4, 5. We have a rally, huge rally with this kind of volume, with really low volume here. I think this was, I remember something like that. Alright. Yeah, a rotational day, man, my friend. You know, the also chop and rotation are also high in 2 days. And I think, you know, here, you know, the market, oh, come on, man, look at that. This is the 100, and it's right there, here, right there. There might be some selling that come here, and we have some with this, or maybe this, you know, these areas also are kind of the same way how I treat these century numbers here, the 51, and I kind of like give the market some room above and below, right? And I have a tendency to let the market chop back and forth around these numbers. The same thing happens around these moving averages, right? If this market is selling from this, you know, this is a short-term trade. This market is getting short. In you know, in inventories in weak hands. This have a tendency to have back and forth from these levels as well. But when I see this kind of highs, I don't want to be short. Honestly, I know the short is not the side I watch. The ES is in between, right? The ES is in between this. The 50 is up here. The 100, well, doesn't look that far now. And look at this. This is very interesting in ES as well. I want to extend this to the right. Look at how well this high is. Right from this trend line. Okay, come on, man. and this doesn't mean, okay, this doesn't mean that the market is not going to hold. It cannot. The selling that comes from that level doesn't mean it's not going to work. I'm not saying that. This is just one information, right? Okay, what I do most of the time, most part of this job is spent in taking notes, observation. You start observing, and then when you have something, for example, okay, there's something can happen here. All right, but it will just come. Jim says that let the trade come to you. It really does. And one of the reasons why I hold Jim in such a high regards is because every single little thing that he has taught me or he has spoke in his intensives, it becomes true. It becomes I went through those things, and it is when you get to those things. Okay, I got this fine. I got this right. I have discovered something, and then you realize, okay, but this is something that he was telling or talking about all the time talking about that. He was being repetitive, you know. He was telling you the same thing over and over, right? That's the first part, listening to that. The second part is when you get that information and when you discover that by yourself. That's when it becomes yours. It's not Jim's anymore. That's when it's yours. And you will start to notice that happen one bit at a time, one piece at a time, one little piece of that thing at the time. know, I wonder now if this market can come all the way up to here. And this is working the odds, right? We never know what's going to happen. We never know what's going to. I have decided not to trade today, right? I decided not to do that. Having this piece of information, you know, okay, this can happen here. The ES moves similar to the down, or the down moves like the ES. Okay, I got that one. I have the Nasdaq, you know, getting weaker in the upper side. Getting weaker in the upper side. So there are good odds here, and I got my market ES. So I play the odds, right? That is oh, come on, what kind odd thinking? Oh, come on, what is the other word? My God. Probabilistic thinking. That's probabilistic thinking. And you just take your chances there, and you know what needs to happen. You know what needs to happen, right? And you know what to do when that thing that needs to happen doesn't happen. Right? Doesn't happen. The Dow is getting closer and closer to this movie. And where this information was, right? Did I put this here? Right? The only thing that I did here was adding this information, and because I decided to do something there, I added that information to my, oh, come on, to my chart here. Right? But this is part of your homework. Now you may be seeing, you have seen Jim doing his homework. You have read his, you know, I wish I can be like that, right? Putting words, he does, you know, every time his description on the market has become better. It's becoming better and better and better and better. Time after time, he sends you especially when he sees something relevant, really important, he gives you access to his homework, right? And you know, you can see the progress that man, he never stops learning, right? Once you got the curve, I guess he's in the exponential part of the curve, right? With this thing when, you know, first is slow, the slope is really low, and then it just grows exponentially. Now, okay? Here, what's happening in the bond market? Do you remember what we talked about the bond market? I want you to think about that. Do you remember what we talked about the bond market? What was happening there in the bond market? Okay? What was happening here? The intraday. Look at the daily here. It is a range. We have a range with a gap here, inside bar. But what's happening in the intraday? Look at where this market is being bought. No? We had like 2, 3 before. Now we have 4 lows here. 1, 2, 3, 4 lows. So the odds that if this market has a movement here to take these lows, I'm going to watch that carefully, because if that movement is really slow and it doesn't have downside extension, it just removes this and can come back, right? But if it's fast, it really can have, you know, momentum can join here and take this, and this market can drag, right? Really can drag these ones. But what happens if that doesn't happen, right? That doesn't happen. And you can see, you know, there's a lot of things, right? There's a lot of information that you are constantly checking, monitor, and that's the job. That's the job that we do here. That's the business. That's part of the business, right? and all of that just to perform in like if you have a long trade may last a couple of hours, if you have a fast trade, uh, you know we use those things, right? If it breaks in bond, it is upside bias. No, the break actually pulls the market lower. Uh, I'm not, and that's another thing. Be careful not to get the bias from that market. Just because that market is going lower doesn't mean I'm going to short the market, right? Because if this market is having momentum, for example, it's just going to, it may just ignore that. Remember, inventory is super short. This market is super short, very short. And the thing is, you observe those markets over and over and over, and absorb how the market reacts. You absorb that, and becomes part of you, right? And this just becomes a habit, to check here, to check there. Oh, and it's at the beginning it's very hard. When I put in Discord, I guess I put okay, I put that in Discord. That's that what you see there in Discord. That's the notification. Notification that I have from Financial Juice. For example, 10:26 today. There's something there. It doesn't matter. But this is somebody, European Central Bank Holzman. I don't know who that guy is. It's somebody in the board of ECB. If the Fed doesn't cut, I can see 3-4 cuts this year. Now, now the Europe is joining, right? Europe is saying the same thing, right? If the Fed doesn't cut, they are not going to do 3-4, which means that they were expecting to do 3-4 cuts this year. That can be, some people trade the DAX. I don't know. Maybe. I don't know what's going on there. And I had that notification from Financial Juice. I don't remember how I did that. And I guess there's a... organize Financial Juice. This is, and that's the only thing, because too much. I don't read these things. There is something here. This is notifications. Open. So I guess they ask you. Or you can ask them. I guess you need to check your Chrome. I don't remember how I did it. Wait a minute. When I started with Jim, it was the amount of information was really overwhelming. Boy, this is so much, man. Wow, how can somebody possible, being monitoring all these things, right? When you get to that stage, the next step is you realize, man, I can do that, but how I uh, what I do to not to get bias from that information. That's the other thing, right? So you are always constantly working, and those are milestones, right? You just keep doing one thing, then another little thing, then another little thing, then another thing. Um, and the thing is, if you have a daytime job, it is harder. It is really harder because you spend a lot of time and energy and resources, physical, and mental resources in your daytime job as well. You if you are the jobs that I had were physical, were not mental. So I had the mental part kind of like free, right? Available. I I I use the mental side just when I did my estimates or those things, and usually that was didn't last much, maybe 1 day or 2 days, and after that was everything was physical, right? Just getting, making the dreams, making the project a reality. That was it, right? I didn't have too much mental. But when we have, especially, I cannot imagine, for example, an accountant. Accountants have a lot of things. They are thinking all day long, right? Doing numbers. I think you are yourself. You are a lawyer. You have to read a lot, right? And you are constantly reading. Keeping yourself up to date with new laws, regulations, all those stuff. That takes tremendous amount of resources, mental resources. Right now, the market is ignoring. This market is ignoring it's ignoring, completely ignoring. Now the Dow has reached the 100. So, and that's a long trade, all right? That's a long trade here. That's it. Right? I cut it. I didn't. I cut it kind of like down here, I believe, or something. Right? It is one bit at a time. Sometimes we aim at home runs. I want to make $2,000 today. When you see this movement, oh, it's up here. Oh, boy, I could have made $3,000, $4,000, right? We just put too much pressure on ourselves. Learn first about market dynamics, then build your strategy, right? And you also have to get to know yourself. I have dedicated, uh, 2.5 years full time to learn. And I by learning, I mean I was watching the market, rewatching the webinars, being in the intensives from 7:30, 8 a.m. in the morning, all the way up to 10, 11, 12, 1 a.m. in the evening, every single day, Monday through Sunday. That's what I did. And it is very important. This is the thing, right? I didn't know I was doing just, I was kind of like burning myself. The burnout that I had was extreme. And when you have that, no matter what you do, you just can't improve. Because the stress, the anxiety is there, right? The pressure that you put, the pressure that you put yourself, under is just extreme. And when I started to relax, when I started to forget, because it was hard for me. It was easy for me when I was doing physical job to leave the job. Once I'm done, I'm done. I can't do nothing else. Once I leave, I left the job site. I can do nothing else. maybe when I leave the job, I go back home. I went back home. If I was struggling in my job, I realized, this is easy to fix, right? Just when I am relaxed, when I am in the bed, or maybe next day when I am fresh, I can see the solution that right away, really easy one, right? But in this job in trading wasn't like that because it was mental. I I wake up with trading with markets. I eat ate through markets. Everything I did was markets were always in my mind. I cannot this unlink. I cannot decouple myself from that. I didn't have the rest, the appropriate rest, and rest is very important, right? Because when you and that's what you learn also from these books, right? From that's what I learned from Eagleman. You know, you actually need to rest, right? James Clear also said that in his book, you actually need to rest. The physical and mental learning is you need to rest. You need to sleep in order for those new things that you are learning to be absorbed, to become part of your subconscious. That happens during the sleep time. You know? That's another reason why once I am done here, when the market's closed, I do my homework. I may do my homework. Before I had strict rules, right? I do my homework as soon as the market closed. But I was just super tired. And I am flexible on that. Sometimes I do it right away when I'm feeling good. Sometimes I do it late in the overnight, maybe around 10. But I try to go to bed early, not that late. It's impossible for me to go bed before 11 or 12. And try to forget. I completely forget about what I don't want. I don't want to see what's happening. I don't want to see. Markets, let the market do whatever it does. If it's rallying, let the market rally. Breaking, let the market. I don't work. And there was a time when I stream, you know, my market profiles in the TV, in my bedroom TV. I have the markets there, right? That's how obsessive I become. Right? After 2.5, 3 years, you know, I realized that I was just killing myself. And now I feel more relaxed. I take my time. All right. Right now, for example, today I felt tired in the morning, and also I was having some kind of anxiety, and I was kind of upset with myself too for what happened yesterday. And those are the things that I had to deal with. The other part of the work was, you know, I got therapy as well. I had therapy for like 6, 8 months, something like that. Every other week, I was seeing a psychologist because I had when you do trading, and I hear this happen to everyone, right? Yeah, there are a lot of unresolved issues that we have, we carry with us, and we need to take care of those things. Because if your personal life is not right, we can't just set those things aside and be in the market and try to do what we want to do in the market. There was not one but many people that say that, and now I say the same thing. Right? We have to resolve. Right? When we trade, we get to know the best and the worst of ourselves, and sometimes we don't. You know, when we are in this journey, we don't like. No, we don't like what we discover, because there are some things that are so deep. Yeah, you know, so deep in our subconscious, that are moving, right? That are moving our directing our behavior. This book, what's the name of this book? You see, it's an Eagleman, David Eagleman book. Incognito, the David Eagleman. That's really, that's this one here. It's really good, really good. I got this one as well. I didn't read. I already had this, but I didn't start. Emotional intelligence. I guess this has related with the book that you have recommended me as well. Yeah, it is possible. The lucky whereas I have my son always told me, buy Bitcoin, buy Bitcoin. Well, this was 5 years ago. And one of his friends, he now is 21. One of his friends, these are two brothers. You know, the eldest was like two grades. When he was in middle school, his brother was as a junior or sophomore in high school. They both got Bitcoin, right? And the elder made like how much he made, like 3,000, something like that, right? And for somebody in high school, that was a lot of money. But when Bitcoin went to 10,000, he regretted so much selling his Bitcoin, right? And his brother, the youngest one, the one that was with my son in high school, he made like 70,000. I know, and he also got into the NFT trade and that stuff, and he did over 150,000. And that's the second part you say. That's the lucky one. The risk of the lucky is that I think it gives you, and I told that to him, right? It gives you this false self confidence, sense of self confidence, right? That you are good, and it takes only one trade. It takes only one trade to take everything you have learned in the past. It can be in your entire career, because that's you think you're good, right? You're good, but the reality is you got lucky, right? You got lucky, and it's not easy. This job is not easy. That's something that people don't want to accept. I didn't want to accept that. I knew I had to do a lot of things, but I thought just because I worked super hard, I was full time, I worked 18 hours a day, I thought that was enough. And it's not like that. You have to be smart. It is a process, right? If you are successful in one area of your life, if you have a professional career, if you're successful in your career, you have to, this happens all the time, right? We think that we can just move that, transpose that to trading, and it's just not like that. This has this learning curve, right? And we have to be very careful, right? The goal, now I can say, the goal is, preserve capital. Learn how to trade first. Get to know yourself. Establishing a strategy. And these prop accounts that you can find, I wish I knew they were there, right? I knew they were there, but I thought, this is just BS, right? But when you start to lose capital, that's how you live. You live better in that way. Let me show you. This is what I have, for example, right? This is what I was This is Apex, and this is a funded account. I got it. So why not, right? I mean, if somebody is going to give you money, you need to prove your self worth, right? You need to prove your self worth, and you can do this. Once you do that, you can do yourself too. But use these ones. I'm not saying. I'm not saying. If you come as some other way, or you can use micros too, right? In micros is one movement, one really bad movement, you can lose $50, right? But the thing is, why I do that? If I can use these companies, I can pay $50 a month and do the same, right? Do the same. But the objective is not to make money there, right? The objective is learn how to trade, right? Build your strategy there. Get to know market dynamics there. Why are you doing that? All right. The objective is not in the same way. If you are an accountant, if you're a lawyer, you don't. Why you are there to make money? No, if that's your main objective, I think you are not that good. You don't pay too much attention to the customers. The best ones, and that's what I want. If I look for an accountant, yes, I will look for somebody who is passionate about his job, who cares about his job, not just the money. The money is there, right? The money is important. Those guys will charge you more, and they hear now that we have reviews and all those things. They will hear those reviews, right? That's how I build. I used to have a small business as well, and that's how I build. And you choose your customers. At first they choose you, and then you choose your customers. And this business, trading, this business is all about yourself. It's all about you. It is so counterintuitive, but you say that you need to know the markets, right? You watch a lot of information. I just show you the bond market. I just show you the Dow, the Nasdaq, what those markets are doing. I just show you the financial news notifications that I have. All those things, right? How can it be just about you? Right? But that's how it is. It is just because it is you who plays a trade. It is you that make the decision to take a risk. Because we take a risk. We must take a risk here. There is nothing here that is made without taking risk. And we lose a lot. The curious thing, the really interesting thing here is the traders that have a lot of wins don't last. It's unbelievable. It's unbelievable. It's so counterintuitive. How that can be possible, right? Most of the traders have a lot of wins. Most of them have a lot of wins. 60, 70, 80, something like that, 80% have a lot of wins. I mean, more wins than losses. Right? More winning trades than losing trades. But they lose money. And that's the thing. That's when you realize you need to learn about market dynamics, you need to learn about yourself, and you need to create your strategy. One of the things I used to do, for example, okay, I'm going to take this high out. This is, and then, gosh, every time I was getting killed. And what I did is, one of my simple rules. It started with simple rules, huh? Do not trade intraday breakouts. That's my rule. I just don't take this trade just because it's going to take this big high. I don't do that just because that. No. Breakouts for me are this one here and this one here, right? This is a breakout of yesterday's range, and this is a breakout of yesterday's range. Those are breakout trades. That's why I may go long here, and I may go short here below, right? That's it, but not these ones. Yeah. You have seen, for example, now today, just today, you know, I place a bet, right? Based it in odds, but just based it in odds. What it is? Come on, what is it? Oh, here. Based it in odds, because I saw that, you know, the strongest market was what it is was the Dow, right? Because the market was coming to check this one. You know, who sells from this specific level, right? They may be squeezed today. They can have a squeeze here. Yeah? That's what I did. I took that long and I placed a bet, and I explained it what will I do, you know, how I'm going to monitor the trade, and what I do, what needs to happen, and what is the potential destination of that trade, and how will I close the trade, how I will know it's not working. That's the reason of that trade, you know. And if you pay attention to this, I didn't realize this. I'm just thinking about this. This is a breakout trade. You have 2-day range of breakout trade. You know, it's taking this high. It's a breakout to the upside. You know, it's not an intraday breakout. It's a breakout to the upside. It's not like DS, right? No, this is a breakout actually on the daily time frame. Right? This is a breakout trade. I just realized that. You know, and you know, you have those things in your mind. It's internalized now, right? It is there. Now you can see it is there, right? I may say, I am saying, I just realized that, but it's part of the subconscious now. And Jim has a lot of those things, right? And I think Jim has those things so deep that he didn't realize those things. He didn't realize that these things that seem so natural. That's also part of teaching, right? When you know something, you're a lawyer, you're an accountant, and you try to teach somebody new, we have the tendency, this is a bias also, no? We think that the other person will think like we think, and he will understand what we are trying to explain, because we think they have the same knowledge, no, even though they don't. If you have children, probably you will understand that also, no? Our kids just get so confused when we give them directions or instructions to do something, and they just can't accomplish, and we may become impatient. How come you don't do this? It's so easy, right? But it's so easy for us, not for them. It's the first time they are doing that. No, nobody in my family wants to do that. It's very hard. What I tell them is, actually, you know, everybody wants to go to heaven, right? Everybody wants to go to heaven, but nobody wants to die. That's something I don't know where who said that. I don't know who said that. I guess Neil deGrasse Tyson said it. I don't know who said, but I like that. I associate that with you know, how we want easy things, how we want what is achieved with tremendous amount of effort, but you know, without doing it. You know, we want to have the life of millionaires, but we don't want to put the effort, right, to do, you know, to get there. I really like that. I try to explain to my son but he's into other things. I also told him about the Discord, right? If he wants to do some kind of business in from the streaming part, but he's not just interested in that. Do you have other? I don't want to steal. No, but no, it's okay. Just ask Mia. Something that I can say, for example, you know, I am learning this thing as well. The Discord has its pros and cons, advantage and disadvantage. Right? You say I help you, and let me tell you something. You help me a lot as well, right? Really, 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 really good. But I don't want to talk. Sam is not here, for example, right? I hope Sam can hear this, right? I have because I say this to him as well. There was one day when I answered one of his questions. Pretty much the whole stream was dedicated to him, but I didn't realize I didn't have the microphones. Something happened there that I didn't have sound. I don't know if that was good, but I end that stream apologizing to him because this can be I may have been too harsh to you, but these things you need to hear these things. You need to hear these things that I say to you, and you need to be able to process this. If you are affected for what I say, I have just said, you may not be the person. This business maybe is not for you, because here we need to change. We take hits over hits over hits, and we need to adapt. All right, if I am pride, I am have my ego is too high. That's going to kill me here. I must be able to accept criticism and process it, right? Constructive criticism and process in order to grow. I also need to be able to to put what is necessary, to put the effort here. You do that. You are doing that. Some is in a stage, I think that he wants everything easier. When you see that, and I think that you know that, and that you have perceived that as well. And when you perceive that, it's because it means that you are not in that level anymore. You have moved forward. You are on another stage of the career, right, or the journey. But how long this is going to take, I don't know. It is going to take for you, that I don't know. I cannot say. But there is a time. Now, some people can trace it to one specific point, but to others is a journey. Right? I cannot trace. There's some advice that I find right in the right time, right? That thing that I hear, for example, that change happens when you become, when you get sick. When you look at the mirror and hate the person that you say, hate the trait that you see there, right? When you get tired of yourself, and I guess some of that, I guess Tom Haggard talks about that as well in his book, and it's not the first one. All right, that's a constant. There's a constant of many traders, right? You start to go through those things, and if you can see that, you can see the difference. You can see where Sam is in his journey. It means that you are not in that stage, right? So that answered also to your question. That's why I say I think you can see him, and you can see yourself reflected in him. You can see, oh, okay, I was there. right? And it just keeps. And you will realize also uh, what stage of the journey of the learning process you are. Novice, beginner, confident, proficient, and expert. It's not that I think I am. It's you realize where you are at, right? And those five stages, it just happens. I cannot tell you where you are at, but it's a process, right? It's a process. The other rules, and it all depends on what you do. It's really simple, man. These are really simple rules. And it's just you, right? I don't know your life, what kind of a life you have, what kind of situations you are in, and it all depends on you. Let me see what other. Be neutral, for example, right? Just you know, neutral. Sleep 7 to 8 hours. Right? That's you hear this. Do not hedge a losing position. Right? I do not hedge a losing. But if you're losing, I call it. Right? Do not add to a losing position. You will hear this everywhere. Everyone will tell you this. Don't add. If I'm losing, I don't add. There's one exception here, right? That I do. For example, I may plan to be, for example, here, right? And just because it's close today in the Dow, right? I am okay. I see some odds. I have a bias to the upside. I think there's some odds to the upside, and okay, I'm going to go long if the market takes this high, right? And unless this low is taken, okay, I may decide to go long. Let's say here where this opening is, right? And the market, I go long here, and the market comes back, but I may have, my full position can be 2 or 3, for example, right? Okay, I may go here, I may add to that, but that because it was the plan. Okay, that was the plan. If I go long here and okay, but it's moving against me, I'm going to average. Instead of being long here, if I add here, now I'm going to be long here. That's not a plan. That's not a strategy. Just price averaging is not a strategy. Okay? That's why I have that simple rule. Do not add to a losing position. Do your homework every single day. No excuses. One thing, for example, that I think is not, I moved past through that. Learn to focus, how to focus on developing value. Right? That was a time, because it takes time. It can be very boring, developing value. Right? Another thing. Once you exit a trade, forget about it. Okay? Move to the next one. No regrets. Right? Developed traders take longer time to develop, right? A succession of several periods. It is based on what other traders are thinking and doing. And I keep adding to this, not adding and removing. You can miss a trade for the right reasons. I think that's not a rule, but kind of like an observation. Another observation I have here in these simple rules is, when the market puts you to sleep, is when it can come to get you. That's another observation that is based, right, on what happened. No? Once you exit a trade, it is done. Do not re-enter an old trade. Okay. Do not re-enter a trade, meaning that I have a set of rules to take a trade, take profits, or take losses. I'm not going to use the same rule for the next one. right? It may happen that happen to be the same, but I'm not going to use based it on what happened before. Do not look for a trade. Again, down, remain as neutral as possible. Again, neutral. Use MGI to neutralize bias. You know, make playing poker a habit. I want. This is when that's not anymore. Right? I don't use that. Abandon what is not productive and take your focus away. That is taking your focus away from the market and is creating unworthy distractions. Another observation: risk is necessary. Every entry will always carry some risk. Assess risk, entry and exits before placing a trade, right? Especially the exits. Right? Establish what the market needs to do and what cannot do before and during a trade. Monitor a trade is fundamental to trade, not just during the trade, but during the whole time. Now you can see here, trades are buying the dips here. I'm just watching this. The Dow. Look at what's happening with the Dow. The Dow has taken this 100, and now it's showing some weakness here. Right? So there's a breakout. Yes, it is a breakout of the day. Yeah, it has come back inside. This is very mechanical low actually, right? But I'm not in this anymore. What else? If you feel tired, do not trade. And I have a lot of this, and this is part, and it start. The thing is, it had to start somewhere. And once you start doing, the process is just refining them, right? But you need to start somewhere, at some point. The homework, relative to homework, is not just. This is part of the homework, right? This is part of the homework. On what I do that. Yesterday, my homework was really short. This is what I have yesterday, for example, right? Because I came to the market kind of around 1 p.m. Inventory go, and I got here when I got the market when I was here. Inventory got too short. I did something here. What happened here? And these are my time frames. No, I wanted to do it fast. I feel I didn't have too much time. This is what is this? Getting to the 5% here. For example, I got the adjusted here. I observe. You start doing this, right? Checking this. Sometimes I do like a couple of days, 2-3 days ago. I thought it was relevant to separate those ones, and I did one, separate from each other, and I start taking notes, right, developing things like that. But most of the time I do this, right? I notice, for example, this is the adjusted contract. I notice, this pullback. Come on, man, this is a really pullback here. This pullback is this is a 50% pullback from 2022 highs. So this is a good area where some buying can happen, some kind of rallies can happen, some short cover rally to rebalance some of the short inventory. It's a logical place. 50% of this move. Right? Also, the big gap has been filled. Right? And also, this is selling from this trend line. The market may come all the way up to here today. the same way how it happens in the Dow, when it was selling from the 100 moving average. That's that is happening in the ES as well, right? So if there's something to the upside, that must be some selling may happen there. But what do we have there? Then you keep this kind of like a zoom out. This is to zoom out. Then I have the market profiles. This gap has been closed. Inventory is super short here. Super short, very short in weak hands. The most important thing. Watch. I strongly suggest you to watch Jim's webinar from yesterday. He has something that this is regarding the current break. Jim said today this webinar today is something I didn't knew, right? This information that he has. I learned that today from him. The possibly big hedge funds are heavily invested, and that there is no, and that's true, right? You hear that in the news. If you are watching CNBC or stuff like that, you hear that they are invested, they are long, they are having a good year because the last year was bad, blah 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 blah, right? What I was watching, I didn't see big blocks coming after the close. And what the heck is that? These ones, right? These ones here. Big block here, for example, there's 1,000, in L period. But these kind of blocks are not coming after the market has closed. I didn't see that. Since, I guess the market was way up here. I didn't see that. And this is personal, for an observation, right? When I start to see that coming, okay, that's when change can happen. There's something here, right? There's something that is changing, all right? I didn't know what that is, but that's an observation only. The way how Jim verbalized the knowledge that he has is way more than I have, or I can do, or I can say, or I can know, right? And it helped me. What he did yesterday on his webinar really helped me. I really appreciate what he, putting those things, out there is, you don't find that. You don't find that quite easily. I guess Tom Hugard is a different type of trader. He's a different type of trader. But he puts his he also trades live. He has a channel. I guess he's starting to do YouTube, but he does Telegram. There's another thing he does when he streams. He trades live. But he's a different type of trader. He's not a discretionary trader. He's a technical trader, right? And I do, I do these things to remember myself what I have learned, because when I go further back, I cannot just see I just get lost. Right? I just keep going higher and higher and higher and go back in time. I don't know for how long back in time this go, but it goes. But the way how Jim do his reports, that's where I want to get. I do have my observations. I have the thoughts. But when I materialize, I put them in words, I can't do it in the way how he does, right? That's something that he also suggests you to do it, right? You may have different brain. It may be easier for you to verbalize your thoughts, to do sentences, talk about that, what you are thinking, to put it out there, in a narrative format, right? That's the goal. That's the homework, right? And what the homework does is shakes your brain from what you are watching here right now. You're just watching here. You are watching this. We are so focused in this period, in the action that is going on, what is happening here, watching the other markets. You are zooming really, really, you're zooming a lot, right? Doing the homework can shake it off, shake that off, and allows you to see another things, right? If I haven't done my homework, I wouldn't have seen what was happening in the Dow, for example. I don't want to talk. I don't like to talk about trades, actually, right? About the result, the outcomes of the trades. I really don't like. I think, especially if you are in early stage, or you are learning, that is going to play against you. You have said that too. Right? You have said that you want to be successful, you want to do what other people is doing, right? And I don't like that. I think that's unnecessary pressure, right? If I describe a trade, if I talk about a trade, I like to talk why I took it and why I closed it, for example. Right? We were here and we have gone through some losses here. Right? I guess it was, I don't know when, it was something like going long here, going short here, something like that, right? Taking losses, cutting those things, those things, and why you take that, right? That I give more value to that rather than the profits. I think if somebody talks about profits, that's not good, right? It is part of the business, but it is not what where our focus must be. If we are focusing in that, that's not good, right? As a matter of fact, for example, what I do here. I got this in my account, so I got this here. I got this off, right? I got this off. The only thing that I got, and the balance is also off. I got off here. But the only thing that I have here is the position and the average price. Because I cannot, but I can see it here as well. I have that one in that, and also in here, and this is the other account. I have it. I don't have it here, right? Open profit. These are off. I don't want to see that. This is very distracting, and the account balance also is counterproductive. I don't want to see that. You wanna move past that. And if I'm going to talk about that, I believe it's going to hurt you. Anybody who's trying to learn is going to hurt the process. It's going to be counterproductive to the process. Now, check the Dow, for example. What's happened with the Dow here? Right? Feels here, but you got something. We never are going to take advantage of the full movement. I'm going to take a trade down here. I'm going to sell up here. That's not going to happen. Someday will happen, right? And you will realize, I bought at the lows and sell at the highs. The feeling is so good, but you want to get rid of that. You don't want to feel that. If you are feeling so high, then don't feel, you got too much endorphins in your body. Okay, you better walk away because you have become a risk to yourself. You become too overconfident. And this trade, having the trade plan beforehand helps. I close it, I guess, down here, right? Something like that, right? Right? my first entry, I guess, was down here. Then I closed it somewhere up here. And then when I saw what the ES and Nasdaq were doing, I re-entered somewhere in here, and close. So it's not bad, right? But it's not a home run. It's not. I didn't make lots of money, right? And that is what you can learn from playing poker. These apps are free. You can have some Texas, whatever poker game you have, you can have it by free. You don't have to spend any money. In there, you will learn. If you don't play poker already, but I am assuming you don't play. Who knows? You have to play. You will go through. If you don't know, you will go to the process. First playing your cards, then trying to guess what other players are playing, and last you actually, you play the players. You don't care about what kind of cards you have, right? And that how you take risks, how you manage risk, right? You have a strategy, and I said this before, right? It is very tempting, to go all in because you think you have a good cards, but you are not sticking to your strategy. And when what you have earned, in the whole day, on the past days, past weeks, can be given away in one play because you go all in one play because you think it is impossible. I'm going to lose here. I'm not. I have the perfect cards, and you lose. Right? That's the thing here. Right? That happens a lot, and I talk about that because I think it's important to learn that game because it helps, and to manage risk. And it's not that it's. I had some fun there too, right? And the thing is, when you become focused in how much you are going to make when you're playing poker, and it's a free game, right? They give you chips by free. It's free. Even though it's free, when you have I may win 200,000 chips, right? More. You have that, right? You have that in that game. Because the feeling, right? Because the feelings we have, we all have greed in that case, right? We lack discipline and don't stick to our rules. You start building a strategy as well, right? And in poker, we do not have influence in the outcome of the bet you place. You are the one. Once the bet is done, is placed, you don't have to do anything. You either win or lose. In trading, you have to actually do something to lose or to win. It's not the market who gives you wins or losses. It is yourself, who cut a trade and take the loss, or take a winner, right? If you when you have a strategy, for example, this is just, it's I guess I am taking a risk here, of being sounding so simple here. When you have a strategy, right? You stick to your strategy, right? Okay, needs to happen. This is happening when this is going to be. I'm planning. I'm not going to take profits right to the tick, right? This market can very well be up here, and I will be feeling like I'm stupid. Oh, I am a dumb head, right? What the stupid you are. You have, you could have left the trade running. You will have $1,000, $2,000 here. Instead, you have only whatever, right? But that's not, right? That's part of the feelings that we need to deal with. That's part of the strategy, right? Now, boy, I'm looking like a genius now, right? But be careful with that. I got the market. I have figured out the market. Who can be better than me, right? That feeling also has to be put, just drop sure not feeling. You don't want to feel that. If you are feeling that, okay, be aware, right? I have these big red flags that when I'm feeling like that, well, okay, I better calm down or leave or do something else. I don't want to feel that. Or walk away or whatever, right? Oh man, thank you. It's really good. That's why I say, man, you helping you're helping me. I'm glad to be your help. I am, um, you know, I had so many problems with my wife throughout the years because of my family, the part of the part of the country where we are from. I am from a small town, a really small town. We know each other. I mean, at least my parents knew everyone in the town. Everyone, they were family, and we help each other. And that was a given, right? If you were going through something, you were there to help. And when I moved to a bigger town, I went through that from that little town, kind of like 2,000 inhabitants, not more than that. And then I moved to a bigger town, first to a 200,000, and then to like a 5 million. Uh, that was actually play against me. It wasn't good because people take advantage of that. But something, and my wife is from a bigger town. Her experiences are way different than mine, right? I am very trustful. I trust people. She doesn't trust anybody, right? Because she was hurt so many times, right? Um, when I help people, especially when they're a woman, right? That's when I have problem. But that's how I am. Right? And if I am of help to somebody, at least one, oh man, it feels good. It really feels good. It makes me feel good. And also, I would say, right, by just by the fact that you are there, it helps me to remain focused, right? We were talking here about these things. How much time has passed, right? 1 hour or something like that. Um, and and that's the job, right? Being here in the market. There will be a time, I know, there will be a time when and you will see that. For me, it was really hard to take that step. Then I realized when Jim was getting in the way, and he said that, you need to jettison what you have learned. There was some time that you have to jettison what you have learned so far if you want to move forward. I, that is also so counterintuitive, right? You have just to do that to move if you want to move forward. It was a hard decision when I decided to do that. But it's necessary. It is part of the process. And then when I came back, uh, Jim was not getting in the way anymore. Jim was actually helping me in a different way. Fields was a mentor, a coach, a teacher, and then it becomes something different, right? Some way like a how can I say this? It's not a partner, right? But like a co-worker, I would say. I guess that's the word. Right? Somebody that that somebody to whom you share similar views right? He sees the market and he sees he has a different, he trades different, right? Than I trade. I am different, right? Sometimes we do the same. Sometimes we see the same and we are doing the same. One of the main things, don't fight. That's another rule, simple rule. Don't fight a trend, right? Get to know what the market is doing. But to know what the market is doing, first you need to know market dynamics, right? You want to understand. If you don't know the trade, for example, what stage this trade is? How can you say what stage this trade is if you don't know what the trade is, right? What the potential trade is. Again, I'm not claiming this. I'm talking. I having the reason talking too much about this, But you have a trade that works. Come on, man. What's happening here, right? And you can see maybe this is innovators, early, late majority, laggards. You identify like that, but you will never know. The stages, actually, you can just guess or speculate. You will know by short just after the fact. Okay? We need to accept that. You got to accept that. We never going to know that just after the fact. Now we can say that, okay, there was some innovators here that have seen that potential, maybe that this market was strong, selling, weak selling. There's some inventory that is a risk that being rebalanced here. It happened, then the laggards, I can see maybe laggards came buy from the 100 moving average, right? Because this market is going lower. The daily, the weekly, and the monthly are lower. Now there's change, right? The weekly is not going. You can see the daily is not lower. You can see the daily yesterday is up here. This is not trending lower anymore. That has ended, right? And markets, we know the markets don't go from we don't have V shapes, right? Those are rare. Those are exception. So odds are you're going to have rotation here. Maybe tomorrow some rebalancing before a directional move. Before we have a directional move. And the same way how we manage this trade, remember how we manage, I don't know, I don't remember when these were, I don't know if it was here or it was up here, right? Or we were taking some loans that didn't work. I took a loan. It was like that, right? I guess it was here. I guess I took a short here or long here. 2 trades. They didn't work, right? They didn't work because you had your plan before, all right? And that's why these prop accounts become useful, right? That becomes useful when it becomes useful. Because it gives you a chance, to watch the market. You watch here, okay, and you will see how hard actually is, when you have your account, you will see it's really hard. Even though it's paper, at the time, the first one is paper, right? It's really hard. It's really hard. Okay, you have I have this, I have my loss, my stop loss somewhere based on what the market is doing. The market needs to do this. I'm going to take a long, or I'm going to take a short. But go ahead and take it, right? You see the market, you see, if you have this habit of cutting your wings short, you will see it's really hard to overcome. But the thing is, you can use that, right? When you are going through the experience, just say to yourself, this trade is working. this trade is working. It's doing what I am expected. I was supposed to do. So the trade is working, and then you just move on. Keep adding to that, right? You keep evolving that concept. The trade is working. In the same way, the trade is not working. Sometimes you are profitable, right? But the market just is not doing what it's doing. And you have this feeling. You have this feeling. Oh, okay, this trade is not working. This market is not doing what I is supposed to do, right? But we at the beginning we refuse to acknowledge that. We just refuse it because I saw the market going in the direction of my trade so many times. And I'm going to I'm going to close my trade, maybe for a little profit or maybe for a small loss, and after that the market is going to move really fast. And here is when you use that to improve, actually to build your strategy without risking more capital. I wish I had knew that. I don't think I think it would have saved me a lot of money, right? But it is what it is, right? I say to my wife, what I am never going to recover what I have lost. I am never going to recover what I lost. What I am going to do, what I can do, is I can make new money, right? I don't see in terms of money, but that's how she sees, right? I'm never going to do that. I can do more, new, but what is lost is lost. What is lost is lost. This is thank you. Oh, thanks, man. Thanks for the words. I am just reading your comments. Yeah. Oh, yeah. Something. I wasn't here. Was I here? Oh, from this day, something that I have noticed from this day is how narrow this range is. How narrow this range is. The difference from other ones has lower volume. How narrow and how I think this is short term. This is short term. Please watch Jim's webinar. Okay, you will have. I think it's really important what you have there. What can happen here, right? But if it doesn't, this day can be very, very important because I see what you see here is the market looks below, but there is buying here. This market was just breaking and breaking and breaking, selling. But what happens is POC moves higher. So one way or another, POC moved higher. I think that had an important role yesterday in this thing as well. I did something here and I did something here as well, and in the opposite direction, right? In the opposite direction, what the market one was a slow trade and the other was a fast trade. And notice how every single high, I got this as a weak high, this is a weak high, exponentially weak high. a lot of weakness in this day, intraday weakness, weak high here, weak high here. You know, this is just short term, very short. It doesn't mean we are going to have a rally. It doesn't mean that, you know. The thing is that there are no buyers. The risk here in this market is we already have a 5% pullback from these highs. What can happen, right? What can happen? The market comes around that, all this, because there is no kind of like what they say, there's no power. They don't have no power. They're not buying, right? They don't have more. They're full invest. Bigger time frame participants are full invest in this market. If this keep coming lower, even though there's a weakness in the market, they will become nervous, because then it's not that they have their money invested, they have all the people's money invested here, right? That's what I got from Jim, right? I pay attention to this, right? When we have these short coverings or long liquidations that happen, it happens really fast, right? And there is kind of like and this is the, when you come back, right? When you come back, it really helps. when you actually can hear it and not get the bias, right? You get glad that you have new information. And you just don't get the bias. You just get the new information. What happened is, and you will see this often, right? When you have this long liquidation short covering, it happens really fast, and this is one quick movement, right? It can last 2-3 days, right? It's one way or the other, The bigger ones are in there, and after that, there is some rival. Remember, this is based on observation. Then if it's going to happen, it doesn't have to happen that way. All right, these are just things that, based on experience. Yeah, you can. I watch his website. I guess he's adding. He has just put those webinars in YouTube. He's starting to put the webinars in YouTube. He has it here. This here. This is the one. He was having some technical difficulties here. He was using just Jen. And I watched the replay. I wasn't here. I decided was not going to do anything. Now let's see if you close. Yeah, it has been closed. Come on, it has been closed. I was asking maybe. It's really hard here. The fact also, this is another thing that I got from Jim. But when you learn, it is one thing when he say it. Another thing when you, I went through this process so many times, right? With so many things. When you discover some things, right? Oh boy, I got this thing, right? I guess you have heard me, especially this week, I guess last week, I was talking about, for example, I was considered something like this a couple of days ago. I don't remember when. I was going to consider this. I was consider this the beginning of okay, I guess it was here, right? Yeah, it was here. I was considering or here. I don't know, something like that, right? I guess it was Yeah, it was this day. I will consider this J period the beginning of the session. Disregard everything that happened before and just take this one, right? Just take that. You know, there was a liquidation that happened. You know, this is longs, market getting long, but the way how it happened, it looked like it was getting short. The market was getting long actually, and this was some liquidation at the close. I was decided to take this, and if this M didn't happen, okay, I would have looked for this thing because it's a narrow range, really narrow range for the high volatility the market was having. And yesterday, same thing. Right? I decided to take this, you know, as the part of and that's why I have this market, that market up here, these things market. First, you mark these rally highs mechanically, because it's a rally high, right? But when you understand, you know, when there is something or maybe something behind, right? When it becomes relevant, and not to trade this. This is not to trade. This is to monitor the market, right? I haven't traded. I decided not to trade the ES today, for example. Right? But if I'm doing something here, okay, this could be. I had a 100 moving average in the down, but in this market, could have been very well this one as well. This one. And also, yesterday, the way how we are sold, how this market was sold, there was some selling that came here, right? But one level can hold the market just so many times. If the market keeps coming back here, outside is going to go through. If that happens, the next thing I do is monitor how it gets through that, right? It is easy, it struggles too much, how it does it. When I'm going to use that information, I don't know. I really don't know. I really don't know. I'm going to, I guess, unless you have any questions, my friend, I guess I'm going to call it a day. I say I was feeling tired. I'm going to take it really. I'm going to take a nap here now. I hope you know what I hope. Yeah? I'm thinking. This is what I'm thinking. Right? I hope this market keeps trading down here. You know, down here. Did value was overlapping lower? Not notice what's happening. I guess you mentioned that, right? Value was. I guess you mentioned something like that. Yeah, overlapping high. Yes, you say that something like that. And what can happen here, for example, if there is sideways trading here, and then there's some break here? That will keep value higher. Overlapping higher. It's not that much, right? It's not that much. It's slightly higher, but it's, and also POC is higher. Could this be a situation like this, but in the opposite direction? Right? This was a situation when POC at the time was higher, I think. You know, market was getting. We had a 45-degree in the long side. Meaning the longs were, longs were super risky, right? I guess that's what we say this day. Can this be the opposite side? Building that's the scenario. I am just thinking about that, right? And before I leave, something like this. Let me see. Yeah, I can. And you do this all the time. POC is up here. Now we have POC because we have a rotational market. What about we have break here? The markets come back here. There's another break, comes back to here. It doesn't have to be exactly one level, right? Next time, if this keeps happening, but it has this pattern, okay, shorts are getting low, less and less and less each time, right? But this takes time. it doesn't happen in one period. It takes time. Another thing, look at this. Right? I didn't see this. This is just so curious, right? When you have a movement, we have directional move and upside movement. In this case, you know how this ends, right? Where this movement ends, it ends when halfback is moved to some significant level. In this case, C low, right? Sometimes it's here, or sometimes it moves to halfback, or this high. No, but this is, it when it happens over and over. I don't think that's a coincidence, right? Those are programs, right? Somebody programs, use these programs to buy or sell, and we use this. They use these conditionals to take profits, right? Or to reverse, or to whatever, right? I don't think to reverse, but rather to take profits. This was something I was watching, right? Remember what happened here, right? When POC was moved higher. Yesterday we have a strong short cover rally that was cut short. That was the first time in the month, right? In the last 4 weeks, that something I see something like this, right? Since we have the break, the beginning of the trend on the highs, this is the first time I have this kind of like a strong movement to the upside. It's the first time. When it's going to happen? Directional move? Who knows? Alright, my friend. I hope you have a good day. If I have anything, I will post something. Sometimes when I see something, this is what happened. I can do two things, right? I can do something, or I can take a screenshot or write something and boom, send it to Discord. And this is based on observations as well, right? It is either one or the other. I have observed that. When I do the post, I miss the opportunity, and when I miss the opportunity, come on, man. Why I'm going to post it, right? Because it's already happening. It's too late, right? I can be seen as a, you say it just because you are after the fact, right? It happens, sometimes it just happens so fast, right? It doesn't give me enough time to. I don't think you maybe, I don't know how to do if I can post, how to do it faster. Okay, I'll see what can be done. Well, man, I hope you got a wonderful rest of the day. Stay safe. Hope I can see you tomorrow. Bye bye.